please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Dr. Soumya Kanti Ghosh is joining us essentially on that particular report. Dr. Ghosh, thank you very much. Appreciate you joining in. You basically say that the rupee depreciation and crude oil price rise brings a big windfall for state governments. Could you just put some numbers to it? Explain that a little bit.
See, what we have done is that the states actually doesn't give out the collections from the petrol and diesel separately. So what we have done is that we have looked at the consumption for each of the states for the last fiscal year. We have looked into the VAT rates of the states, and on the top of that we are assuming that the consumption stays at the same level this year. So whatever increase in revenue is accruing to the states this year is solely because of the increase in the exchange rate and or of the crude prices. So therefore, for each of the state we have done this exercise and have found out what is the increase in the total revenue accruing to each of the states purely because of the depreciation in the exchange rate in the current fiscal, and this number comes to around 22,700 crores.
Dr. Ghosh, can you give us, in a way, some shortcuts? I mean, a $1 rise in crude oil prices benefits states on an aggregate basis by how much? I think you looked at 19 large states for this exercise. Also, a 1% rupee depreciation will mean what kind of gain to states?
We have that number. See, $1 increase in the states is actually resulting in a revenue gain of 1,513 crores for 19 major states of India. And please note that this gain is actually over and above the budgeted fiscal deficit for the current fiscal. So that means that this, in the long term, if we are assuming that the exchange rate stays at 72 and crude stays closer to 75, this gain will actually over and above the budgeted fiscal deficit. So that means the consolidated fiscal deficit, other things remaining unchanged, could actually push down the deficit by 15 to 20 basis points purely because of this increase in the oil prices and or a rupee depreciation.
Okay. Mr. Ghosh, good morning. Have you measured the impact on other macros? For instance, do you expect the states to use the revenue surplus to spend on capex, and if yes, how will that impact growth?
See, the problem with the states is that a lot of the states are actually revenue surplus states. But even after being a revenue surplus states, a lot of the states are actually having a fiscal deficit, because a large part of this surplus is actually going for expenditure schemes which are unproductive, like debt waiver schemes, and also for the matter, Maharashtra actually has the highest, as you know, the VAT rate, and Maharashtra actually is gaining the most from this petrol and diesel prices hike. So, but keeping that matter aside, I think even the revenue surplus states are unable to pass on any possible benefits in this oil because of the oil price hike, purely because of the fact that their capital expenditure, they need to spend a lot of money on this infrastructure creation, and they don't have proper source of revenue because the states are still in a structural changes mode because of the GST being implemented. So I think on a net basis, there is an element of gain because of the current oil prices rally and the rupee depreciating, but I am not sure, given the state's fiscal constraint, how much that could be passed on to the consumer, because at the end of the day, most of this revenue are going to make the revenue expenditure and other sorts of expenditure and the popular schemes which the states are currently running.
Okay. How about the impact on inflation if more states cut VAT? So far, it's only been Karnataka which has cut the VAT. Your own estimate of how rupee depreciation and crude price will impact the CPI?
See, on the overall inflation, I think there could be some other states cutting it. At the end of the day, I think as there are estimates in the public domain, which says that for every 1%, there are RBI estimates which says that every the 5% depreciation, I think, leads to around 20 basis point impact on the headline CPI inflation number. So at the end of the day, I think if the depreciation continues and the crude prices continues to slide down, I think there has been recently some pullback from the levels of 80, because 80 is always a threshold level because of the US sale factor. But I still believe that there will be some impact on inflation in the long term if the rupee continues to stay at this elevated level.